We are shortly getting into the season of investor conferences, and first off the block is the investor conference of Antique Stockbroking. It's a very interesting title they have for their conference, investor conference, Build India, New India. And the builders of the conference itself are with us at this point in time. Dharmesh Dalal and Kirti Doshi. Kirti Doshi, the Managing Director, and Dharmesh Dalal, Co-Head Equities, are joining us. Good morning to both of you. Thank you very much for joining us just, half an hour before what should be a very busy hour for you. In less than half an hour, I guess you're going to be having Gautam Adani and Ashwin Dani and Rana Kapoor, among others, in your midst. So I won't keep you long. But Kirti, just to start with you, what was the pulse of the FIIs and the corporates when you reached out to them? Is there still enthusiasm for India, or do you think this result season is giving you a feeling that, okay, we have bought enough, now let's wait for action?
When we approach them, they are really excited after the last election, what has come out, and they feel that there is a time has come. So they started realizing this and investing into the businesses. Plus they have started really the act together that in next 1 year after, because whatever the government is putting the effort, will start getting the fruit of that from next 6 to 9 months. So they all started putting their effort to be ready for the next boom of the economy.
Okay. Dharmesh, Kirti, good morning and thank you for joining us from the conference. Dharmesh, I want you to come in on, what the expectation is, because your panel is extremely impressive. You have Dilip Shangvi of Sun Pharma, Gautam Adani, Ashwin Dani of Asian Paints, Rana Kapoor, etc. And the likes of Ashwin Dani, don't speak too much, especially to media. What's the sense you're getting about how corporate earnings will pan out from here on? Because in this quarter, it's not been so impressive.
See, corporate earnings have not been encouraging, accepted the fact, but to a large extent, we interacting with lots of people, we get a sense that structural changes at the grassroots levels are happening, and it's a matter of time when you see this getting reflected in the numbers as well. Quite often we lose patience and we would like everything to happen on a quarterly basis, but I'm sure you'll appreciate when it comes to nation building, it's a process which takes time. But I think the fillers which I get is the fundamentals, the foundations are being done on a right perspective, which will lead to fruits in 2 quarters or 3 quarters from now.
Okay. So you think the inflection point in earnings will be, or the improvement in earnings comes in 2 or 3 quarters? That would be what, second half FY16?
Yes.
Okay. What might be the leaders of the rally, you think? I mean, when you put up a phrase, Build India, New India, which were the stocks you had in mind, Dharmesh?
What I would like to highlight here is, first of all, the rally which we saw in 2014 was largely led by counters which probably did not have impact of the economy to a large extent, except for automobiles, IT and pharma, which led the rally, were all dominated more by earnings abroad. Considering the fact that the economy now is at a stage where you will see things improving, I would just like to highlight here, Lata, we have seen in India the cycles of business which rotates after every 6 years. And what we see is that whenever you see a growth of 4 years below a trend line or above the trend line, it moves up on the opposite direction once being sluggish for, say, 3 to 4 years. We have seen this in the last 4-year cycle, where the GDP growth was below the 5.3% mark, and we as a house believe that we are at the cusp of witnessing this change where the trend line would be breaking up on the upward direction. Led to it, the government action will fuel more, which will lead to more demand and numbers getting shown up in 2 quarters or 3 quarters from now.
Fair enough. Kirti, what are you advising clients attending your conference in terms of sector-wise positioning now?
Sector-wise, I think financial will always lead, because any big movement in the economy, the financial is the biggest beneficiary. Then after there is a interest, people have now started revising in infrastructure also and capital goods, plus automobile, which is also be a part of the economy. Once this entire movement of the coal mining, iron ore mining, and all that will start, will lead to even the demand of the heavy commercial vehicle and all that. So lead by financial, then infra, and your automobile, which will be the sector which we will prefer to recommend heavily to our clients.
But Kirti, when you say financial, will you buy PSU banks? I mean, we saw that deep gashes coming in, PNB, Bank of Baroda, some of the biggest banks in the public sector space. Even ICICI was not spared. What will you buy? Or what will you advise buying?
I think mix of both. In the large public sector banks, I think State Bank will be the biggest beneficiary of the economy turning around and NPA coming down once these power related and coal related problems get slowly addressed. I think that you will reflect all this into the reducing in their NPA, and maybe because of even the GSEC coming down will help them for their debt portfolio also. So the State Bank will be the biggest beneficiary, followed by the Canara Bank, which has shown a little bit better result also. And no matter, everybody knows that the largest bank, that is HDFC Bank and ICICI Bank, they are doing well. Maybe because of some issues with some of the infra and the power related issues, ICICI Bank would have provided some NPS. But going forward, I think that also will be addressed in next 1 or 2 quarters when the mining and iron related issues will get over. So I think that also will start reflecting into the lowering down the NPA, and their performance also will improve from here.
Okay. Dharmesh, we have a lot of supply of paper that's going to be hitting the market, in the form of HDFC Bank, SBI, Tata Motors, etc. In your mind, will that put pressure on the market? And if yes, should it be used as a buying opportunity?
Certainly, it has to be used as a buying opportunity. Sonia, my experience suggests that whenever there is a supply of quality paper, money is not an issue. I have always seen, even in the past, that to a large extent, funds, international funds, which are not earmarked for India, but when good quality paper, like say for example, Coal India, which we saw recently, or HDFC Bank coming in, funds which are not even earmarked for India, get diverted to India. So I guess we should not worry about the liquidity. We should probably worry about the quality of paper coming in. If the quality of paper is good, I don't think money will be at all an issue.
I remember once KV Kamath saying this: if there's good quality paper, there will always be money. If there are bankable projects, there will always be money. So you may just wonder, where will I get $1 trillion for infrastructure? If they are bankable, that money will come. Okay, in any case, Dharmesh, the numbers, even for the venerable Asian Paints, was not all that good. That volume pressure could be seen even in good companies. Where does the capex growth, where does the kicker come? Consumers don't have enough money. You can see that they are not buying enough two-wheelers. They are not buying enough paints. Corporates, many of them are beleaguered balance sheets. They will not be able to invest. The fisc is just running tight. 3.6% is going to be a big ask in terms of fiscal deficit. What is the kicker for growth?
In fact, this conference is all about that. And let me just highlight a few things to here. We talked about Swachh Bharat. We talk about Make in India. These all are initiatives. And these are the initiatives which probably can gather momentum. It probably are the cases which enable employment generation, which get into consumption pattern, which help demand growth all across. So, where am I coming from is, this is what we need to highlight here, is that these all initiatives of the government probably will translate into a movement. And don't be surprised, this could probably be a revolution. We have seen this revolution in the past. Remember the Green Revolution in 1960s? So what I'm trying to highlight here is that things on ground reality on things, where sentiments improving first, leading to all these initiatives, housing for all. You will see a lot of things in building material space gaining traction big time. And what we need is improvement in sentiment, which is already happening. All these initiatives, which probably have to address few of the concerns which are being faced, which I'm sure you will see it getting converted in next 2 to 3 months. Is it what the demand will come from? We all will be surprised 6 months down the line when we see all these positive numbers getting reflected. Sorry, my voice is not Audible?
Fine,
I'm
waiting
more
to
on
be
the
surprised.
influence of weather still.
No, we got you.
No, it's okay, Dharmesh. All of us here in the studio are also suffering from the bad weather and bad voice. But finally, before we let you guys go, what do you think the returns could be by the end of the year for the Sensex? And more importantly, if the earnings do not pick up, at least in the early part of FY16, do you think the returns could be more moderate on the index?
Okay, let me put it this way. The returns which you are referring to are two perspectives, which 2014, calendar year 14, which we saw 30% was dominated more by liquidity flows and expectation of the new government leadership all coming in. This year will again be a question of to what extent these numbers and the initiatives which I'm talking about come true. India is in a sweet spot. We are fortunate vis-a-vis all other economies. So I guess some more initiatives by the government and which will see the impact coming through maybe after 6 months or 9 months, but markets will start playing for it. And so 30% return is a challenging aspect, but I guess 20% return is very much doable.
Well, I can only conclude by saying, "Aapke muh mein ghee shakkar." Kirti and Dharmesh, thank you very much for joining us and have a great conference ahead.
Thank you.
Thank you very much.
Thank you very much, Lata and Sonia.